Hello again, everyone. In this technical analysis of the stock market video, I call it below expectations because that's exactly what happened on Friday. The jobs report was well below expectations. I remember sitting there watching it live on TV, and everybody was talking about how it was going to be a million, 1,400,000, and almost all the estimates were there. And then all of a sudden, it was only 266,000 more jobs created last month. So very, very disappointing, but what was the initial reaction? We're going to take a look at that. The 10-year yield, and of course, what moves in the opposite direction is the TLT, the long-term Treasury bonds. And then the rippling effect of that was into the Nasdaq and the Nasdaq 100 and the tech stocks. So we're going to take a look at TNX, TLT, the Nasdaq 100 ETF. And then I want to look at Apple, just kind of an update as to where I think Apple is and where I think it's going. And then we'll touch on the high yield bond fund, HYG, and the McClellan Oscillator and see how that looks at this point in time. All right, so here's the 10-year yield. And you can see, man, I tell you, when they made that announcement, they just slammed it. It just fell right out of bed. The low was down here at, let's see, around 1471, so 1.47%. And then it immediately started to come back. And by the end of the day, it was actually up. It closed Thursday, and the 10-year yield closed at 1.56%. And on Friday, it closed at 1.58%. So pretty good little turnaround here in the 10-year yield. And if you take a look at TLT, it moves in the opposite direction. And I think there's a couple of things that stand out. I want to go to this Elliott wave picture here. You know, we've been wrestling with what kind of wave 4 are we getting? And I'm looking for this 5-wave structure to the downside to complete, and I just don't think it's there. But this wave 4 has been kind of messy. It's been problematic. I mean, we had what looked like a zigzag for wave 2. I don't really like getting another zigzag here for wave 4. It could be something else, and it still may morph into something else. But I'll tell you, the two things that jump out at me here from Friday is this bearish engulfing candle right there, and then this trend line right here. If we continue to sell off and we break this trend line, I would not be surprised to see us start to accelerate to the downside. And if we do that and we come down and, finish off this wave 5, then that 10-year yield is going to be going in the opposite direction. And it's going to be, bouncing back up and going up towards the 2%, I believe, fairly rapidly. So in the opposite direction, I just drew that trend line on TLT. Here's the trend line on the 10-year yield. So they should break them pretty simultaneously, I would think. So this is what we're going to be watching this coming week. And what does this have? This has a rippling effect, as I mentioned, into the Nasdaq stocks. So let's take a look at the Nasdaq 100. So it popped pretty nicely on Friday. It was up 2.69 for the day. And for the week, though, it was down. It was down 3.79 in the weakness that's continued now for 3 weeks in a row. Now, the previous 2 weeks really wasn't doing a whole heck of a lot, but we had a pretty good break at one point here this last week. Now, the real question is this 2-day move, which started on Thursday, is this going anywhere? And the move on Friday, actually, when I look at this, I mean, it didn't get back above the 10-day moving average. It turned into a little doji star type of, it's not star, it's, it's pretty big range, but a little doji type candle. It basically closed right about where it opened for the day. Not a super strong bullish kind of move. When I say that, what I mean, I'm talking about bullish candles like this, where the close is well above where it opened for the day, like what happened on Thursday. We didn't really get that on Friday. So, right now, the two Elliott wave pictures I've got is either the all-time high is right here on April 29th, and we're working our way down in a series, but I really don't have a nice 5-wave move yet, okay? And the other alternative is that, no, we're still working our way higher possibly to finish off this 5th intermediate wave. and we've got a little bit more to go to the upside. And that means we'll take out that April 29th high. But the caveat on this scenario, the line in the sand, is 324.20. We break down below 324.20, and there's no way that this scenario holds, because we would have the fourth wave overlapping wave one. Okay, and that's not going to work for an impulsive move to the upside. Now, we've already had a pretty deep wave four pullback too. That's the other thing. So one way or another, I think we're going to get some pretty good clarification here this coming week. Now, since we're talking about the Nasdaq 100, let's go ahead and talk about Apple and give you an update. But before I do that, I just want to give a little plug for the website and the membership. If you'd like more of this kind of information on a daily basis, we talk about all of these things every day. Head on over to joehenches.net, check out the website, check out the membership. Okay, now on to Apple. Let me pull that up right here and make sure I'm pulling up the right scenario. Here's what I think is going on with this. Back several weeks ago, back in March, at the end of February and March, I thought maybe we had a triangle forming, and it just didn't work out. It failed, is the bottom line. But I think what's happening here now is I'm still looking for this C wave, a much bigger C wave. I'm looking for a 5-wave move to the downside. And I think we have 1, 2, and we're working our way down now. We've started down in minor wave 3. And why am I thinking that? Well, because when I look at the wave structure coming off that low on March 8th, this doesn't look like a 5-wave move to me. Okay, if this was, let's say you thought this was a new bullish move and we're going to new all-time highs. Well, this first wave should be a 5-wave move. Then we got a 3-wave, and then we should get another 5-wave. Well, we only got 3, we only got 3, and we only got 3. So we've had a series of 3-wave moves in here, and that even kind of threw me a little bit with my corrective pattern, but I think what it did is a double zigzag. I think we had a WXY corrective pattern for wave 2. And how did wave 2 correct? It corrected, see, 2 versus 1. Fairly deep. It got well above 61.8%. You know what? Let me take this off a semi-log for a minute, because we're not looking at a huge range in terms of prices over here. So we're still up in here with above 61.8%, probably about, I didn't do the exact math, maybe 2/3, Fibonacci 2/3 in here, 0.667. We're probably very, very close. But the bottom line is, I think we've turned down, and I think we're working our way to the downside. That is my expectation. That's what we're looking at. And you could sit back and say, well, this is going to be on the radar screen too. If we start to break down and break that trend line in here, then we're going to be off to the races to the downside. Okay, that is the picture with Apple. Now, let's take a look at a couple of our indicators, and let's start off with the high yield bond fund. We go back up here, HYG, and I am going to go back over to the moving average scenario I've got. I think we got a little topping formation going on, and it's going to be real interesting to see, do we break down out of this? And this is the daily view. Yeah, it was up 6 cents on Friday, but it sure looks like a topping type of pattern. And when you look over here on the weekly chart, it's interesting that, last year, going from mid actually, yeah, let's say, April, May of 2019 into the highs of January, February of last year, we had this longer term trend line, and it was broken with a vengeance to the downside. They just smashed it. Well, we had a similar type thing, not quite as flat as what happened back there, but this is since mid 2020. And we broke down out of that in early March. And now since then, we've just been hugging the underside of that trend line. And then with the last few weeks, we've just kind of been going sideways. So it's going to be really, really interesting to see if indeed we break down out of this. And then the last thing we'll look at is the McClellan Oscillator, which on the Nasdaq no, not the Nasdaq, sorry, the New York Stock Exchange, is showing a tremendous coiling going on. Huge coiling. And this has all been happening over the last 3 months. This high here is February 9th. And yeah, this is the close at a plus 64. And you can see you get above 150, plus 150, you're extremely overbought, and below minus 150, you're extremely oversold. And we have just been coiling. And I think when this thing breaks out, one way or another, it's going to be a fairly strong move. Okay, that's it for this weekend. We'll see how this coming week plays out. If you felt like the video was helpful, give it a thumbs up. And if you're not a subscriber to the YouTube channel, hit that little subscriber button. And again, like I said, if you'd like more of this kind of information, head on over to joehenches.net and check out the website, check out the membership. Everyone have a great rest of the weekend and a great week. We'll talk to you on the next video.